Gina, is the dollar playing into your outlook at all? Is there any case to be made about US versus rest of the world based on the trends we're seeing in the dollar?
The dollar can be one component that we look at. It is definitely never the overarching component for a decision-making process, but it is one component that we look at. And certainly dollar weakness generally coincides with or correlates with better performance in emerging markets relative to developed markets. I think a lot of analysts have really stretched the relationship and the dollar as a signal for equities. I think if anything, it's a coincidence signal. The dollar tends to rise as equities are falling as a risk-off measurement. Even if fundamentally, I find many people really stretch the value of the dollar as a signal for earnings as well. Nonetheless, it is very clear that dollar-exposed industries' earnings will struggle when the dollar is rising. I think the dollar rise last year also helped shelter some of the more domestic importing industries from much, much deeper struggles on the margin lines because of high import costs, which were somewhat less than they could have been had the dollar not been as strong as it was. But I think that there are some signals you can derive, but none of them are particularly perfect. We've actually attempted to drive the dollar into our multi-country selection model globally, and it's really poor as an indicator, but it's quite good in EM specifically. So you do want to look at how EM currencies are trading relative to the dollar as a component of your selection process for emerging market country allocation, but globally it's a much different proposition.
I think Alan Greenspan once said that he spent unlimited resources at the Fed trying to predict the dollar, and he could not come up with anything.